Hello and welcome to a brand new show of Market Makers. Good books, great actors, and great movies, they don't need no introduction. And when it comes to market, Raamdeo Agrawal needs no introduction because markets adore him and they admire what he's managed to create and construct in last 30 years. Raamdeo, welcome to the show and thank you for joining us. You've done 21 wealth creation studies. The last one was released in December 2016. And I've studied some of your wealth creation studies. My compliments, I enjoy reading every time a new study is released. But your wealth creation studies have evolved over the years.
Yes.
So
that's the very purpose.
If you really have to summarize your 21 essence of your 21 studies, what would be your final conclusion? Because we may feel that things will change, but markets never change. The rule of investing are always the same. Courses remain the same. It's just the horses that change.
Yeah. So I think one of the biggest achievement of this wealth creation study is your distinct philosophy we have got.
Okay.
That is QGLP. I mean, quality growth, longevity, reasonable price. It's a so. I mean, if you ask me what is the most valuable thing in Motilal Oswal, it is their own philosophy. And it is not about the philosophy. You can read the book and you can understand what it is. And I'm willing to spend many hours. And there are so many videos on that. The issue is having faith and practicing. It is my philosophy, So and it works. I mean, if you see across the AMC, it works wonderfully well. I mean, the world will take notice of it much later. I mean, when you manage $3-4 billion, nobody bothers about you in this world of trillions. So, but it works in this thing. So that's a huge achievement. After 22 studies, to have a time-tested investment philosophy, 360-degree, well-rounded kind of thing, because you write something and then you see for yourself it doesn't work. In 6 months, 1 year, 2 years time, 3 years time, you realize that it doesn't work. But I see it works even better. And we are releasing version 2, version 3, because market is continuously changing and we are adopting to the market every day. So this QGLP is very flexible approach in a, kind of a continuously changing market. So I think that is the biggest achievement of our all those studies, and that has changed me. I mean, the way I was as an investor in 85, the way I was in 94, the way I was in 2000, even till 2007, 8, 9, I mean, things were not fully solidified. I mean, it was work in progress kind of thing. Yeah. And you might be seeing, even if you see our interviews, that has changed a lot. And I mean, till 2003, I didn't have courage to take anybody's money. Even my sister's money, I would not take. I said, I will do whatever with my money, but I will not take anybody's money. 2003, we started taking some amount of money from the public. Till about 2014, we had 1,500 crores. And now we are managing 25,000 crores. And I don't feel scared at all. I mean, this is a very big amount of money and it is in trust. I mean, somebody has entrusted us. Somebody has put faith in us, which is a very huge responsibility. But I don't feel burdened or anything like that. I don't feel stress about that. And that is thanks to QGLP. That we have a way and we will walk that same path. Outcome is function of how well we do, and many other things, luck also at the end of it. But if my process is right, even if I mean, at least I can say my process is good. Outcome, if it is good, I mean, outcome has to be good. If outcome is not good, it's a bad luck. And if there is a run of bad luck for 2 years, we'll also have a run of good luck. That much faith I have in the system.
Okay. So the entire construct of the way you manage public money is centered around QGLP.
Yeah.
So let's take that thought forward.
Yes.
And talk about this template and throw in the current market.
Yeah.
Quality, growth, longevity and price. I'll start with the last, which is price.
That is, in this, you have to look at it last. That's why we have kept it last. Okay. Otherwise, we would have said PQGL. No, we are saying QGLP because it could come in any sequence. But it has to be last. See, QGL, what is a QGLP? First three, QGL, quality, growth, longevity. These are three you have to figure out when you look at a business. See, value is what you get, price is what you pay.
Of course.
Okay, this is one of the simplest sentence, but this is the ultimate. I mean, Buffett sells that plaque for $25 in his AGM. Yeah. Okay, price is what you pay, value is what you get. Yeah. So price is known to everybody. Yeah. It is there on a flicker of button, you get everything. But what about the value? Who's going to do the hard work of understanding what is the underlying value? And value is always approximate number. And value could be different for you and value could be different for me for the same thing. because of the background of understanding and things like that.
And the time horizon.
Yeah, and time horizon also, all put together, value is only one because price is only one.
Of course.
Okay, so the issue is that what is the process of figuring out value?
Okay.
Okay, and there are many processes. Every person has a different process. There are million guys, million processes, but still you can bucket it. You know, somebody calls him contrarian, somebody calls him growth, somebody calls him, you know, whatever. I mean, there are ways. There is investment philosophy is this thing. So we say we will do QGL. So of the QGL, I say QG. Do you have QG? Top quality business and growth. So these two are the very important thing for me. If there is no QG, it is no, because out of 3,000, 4,000 companies, 3,980 companies are not there in my portfolio. So I have to be day and night, 24/7. I have to keep saying no, no, no. I have to say one yes, you know, in 6 months or 3 months. So job is very difficult for saying no to a lot of companies which look very attractive at many times.
On an average at the AMC, you just identify 1 or 2 stocks. I mean, that's the endeavor.
Yeah, I mean, if you get 2-3 new stocks in a year, you have more ideas than you can ever execute.
Now, since you manage public money, the portfolio of AMC is out in the public domain, and as we speak, you know, we'll also flash it. At what CAGR growth do you think this portfolio could grow? I'm not talking about price performance, I'm talking about earnings performance.
Yeah, so both will be same. Eventually, both will be same, and we are.
That's indirect way of asking you.
So you know, so far we have done upwards of 25%,
Okay.
and that would be a good. I mean, our managers, if they can deliver 25% plus in every single product, we have only 6 products, so we don't have many products. We don't have within 6 products also. Every product has only about 15 to 20 ideas. So it's a very focused strategy in every aspect of it. You know, we do only equities. So the confusion is not much. I think we would try to achieve that kind of beating the benchmark and getting doubling money in 3 years. That has been the track record. The future or very near term is I mean, only time will tell whether we are able to continue with that or not.
You know, every market, they follow a cycle. Best phase, boom phase, bubble, bust phase and bust, bubble phase and bust phase. Where are we right now in the market cycle? How young is this bull market?
Yeah, so it is quite, I mean, I would not say it's very young. I mean, it is a 14, 15, 16. No, so I would say 3.5 years for sure. Markets have been rallying since Modi ji has been nominated as the Prime Minister candidate in Goa. Since then, the market, in anticipation of that only, market started September or August or something like that, and that rally is still on. So that India hope story that story is still on, and now it is coincidental with the collapse in the oil price and the global equity boom. I mean, US is in unprecedented bull run, so it is definitely giving air cover to the equity as an asset class. And we are on a roll because of lower interest rates, lower inflation, good fiscal deficit, better governance, good possibility that earnings growth will finally happen. This year, I was, even before coming in the morning, first thing I sent to my research chief that what do you think finally this year's earnings EPS would look. So because he sent me 496 for the year for Nifty, I said, what do you think is your view? So he said 470, 475 should come, which is also a good improvement. You know, more like 12, 15%.
At least we are not contracting.
Yeah, we are not stagnant or we are moving. And next year he's saying 600.
Okay.
So, so I think we are almost there. I hope there is no further disruption after demonetization and whatever challenge of wonderful, you know, this GST. My sense is now with the good monsoon, stable inflation and everything, stable currency also. You have almost $400 billion of reserve. Nobody has noticed, but reserve has crossed 390, 392. Every week we are going up by 2%, 2 billion. And I think RBI has to intervene to keep the rupee at 65. Otherwise, it would have gone up a little more. And in the process, they get a lot more dollars. So I think this is very amazing kind of situation. Your fiscal is under control, inflation is under control, political stability is very high, which is first important thing in emerging market and country like India. Which is, so everything is right. I mean, macro backdrop is fantastic, and good companies are doing very well. Valuations are somewhat stretched. okay, and it is looking like a boom type of P multiple, 24, 25 P multiple for current EPS. So that is scaring people, but that's not the only ratio you look at when you're looking at future of the possibility. If you are hopeful about the future, I mean, market can always correct by 5, 10%, 15%, even deeper 20% correction, but it is not down and out, or it is not a done thing. I mean, we are not going to die without having earnings growth cycle coming in, and it will explode whenever it comes, because capex cycle is just not happened. You have to have a one full-fledged excessive capex cycle to come. Last time it was steel and cement. Yeah. This time it will be infra, or I don't know what it will be. That's the beauty of the future. But
that
it
mean
will
revision
come.
is coming.
Huh, why?
Earnings mean revision is coming.
Earnings mean revision is coming, and capex mean revision will also come. Okay. From a zero capex, some way capex will build up. I mean, from the infrastructure government side, they are pushing very hard. Private capex is yet to take out, because there's some slack in the capacity and all in power sector, steel sector, and some of the consumer companies also. But it's just a matter of time. It is, say, like automotive. I mean, like Maruti is, kind of putting up capacity every day, because they need the capacity. So private investment will come as the demand picks up. So I think today's interest rate decision is going to be very crucial, not for per se 25 bips or 50 bips makes a difference, but the consumption economy is very sensitive to these things. Whether it is demand for durables are concerned, demand for housing is concerned, it does, I mean, lower interest rate will help.
Before I get into some myopic questions, which is themes and sectors, I have one follow-up question. The reason why stock markets are getting supported at these levels is because there is a hope that earnings recovery will happen. It could happen this quarter, next quarter, but like you said, an earnings recovery is going to happen. But stock prices have already run up in anticipation of earnings. When the real earnings recovery would happen, markets would say, look, we knew this would happen. And stock prices have gone up. Is that a risk?
या हो सकता है कि मतलब जब अर्निंग्स आए तो मार्केट में रिफ्यूज टू गो अप.
Exactly, that's my point.
जो मतलब buy on rumor, sell on news.
Exactly.
So we are buying on the rumor of earnings.
Earnings recovery.
Yeah, earnings recovery. See, because what has happened is that, I mean, independent of earnings, your valuations, one of the parameters is market cap to GDP. So it used to, when we used to come earlier 3-4 months back, it used to be 70%, 65%. I used to say that market can go down, corrected by 10-15%, but it cannot remain there on a 1 year basis, because 70% is very low. When US is trading at 1.6, we are at 0.7. I mean, we are the growth economy. So
it has to correct.
Yeah, it has to correct. So now we are at about yesterday it was 134.6 or something. So 135 lakh crores. Our GDP is about 150. So we are at 0.9, closer to 0.9 type of market cap to GDP, which is not low, but it is like a mid path kind of thing, because next year where your GDP will be 165 and you are at 135. So that 20 lakhs gap, it leaves you enough room for if recovery comes that much. So 12-15% kind of a 12 months prospect is still there. So yes, it can correct by 15-20%. That I would say correction could be quite good, and that will make the market much more healthier. But I think we are in a, I mean, in 2007 we peaked at 1.7 times. 45 lakh crores was GDP and market cap was 73. That is how, so
long
when the excesses happen, they don't happen with the margin of gin cake, like 100, because by that time your GDP, say in 2 years, 3 years time, your GDP itself will be 175. And if you have to do 1.5, so you're talking about 250, 260 types. So literally market cap can double. And that can happen in 2-3 years time. So there is a lot of potential on the upside. Of course, you have to be always careful that it could correct. I mean, these things are a little longish in calculation. So market is full of surprises. Markets will surprise you. Otherwise, it is not market. If there is no surprise, there is no fun.
Of course, of course. So, but thank you for beautifully explaining that, it is not a bubble yet. No, because that's what everybody is bothered about.
That's what I think, but I hope I'm right.
We got a lot of viewer questions, and one viewer question is that a couple of years ago, how did you identify the opportunity in iShare? How were you able to zero down on Bajaj Finance as an opportunity? Because they were ordinary businesses in 2009 or 10. The RE invention had not happened. Bajaj Finance had just spin off as a subsidiary for the Bajaj group from the elder brother. You were able to catch both these stocks or both these stories young. Why did you zero it down to them? And how?
See, this finding the stocks is a matter of, to some extent, luck and your process. When process and luck both come combined, then you have a kind of multi-bagger. So process is clearly QGLP. I mean, it must have been a slightly nascent form, but my idea was always that find a great company and look for growth. But initially I was not knowing so much difference between good company and great company. So whenever you find a great company, great business, where returns can be 30, 40, 50, 60, 100% kind of return and growth. So what happens is whenever companies, they emerge, I mean when they, it's like saying that any business takes 5, 7, 10 years of struggle, and then it comes out of the first year profit. So first year profit will be what typically in a small business will be say 10, 15 crores now, okay. So that 15 or 20 crores can become 200 crores in very quickly, you know. So say like earnings, you know, in stock market, it is stagnant for so many years. But whenever it will take off, it can take off from 400 to 800 in a breathtaking pace.
So we are at an inflection point.
We are at an inflection point. So this is what happens in companies. You know, you are struggling with the below break even, below break even, below break even, and then the break even comes, and in one swoop the profit goes from 20 crores to 200 crores.
So would you say that AMC business?
So we have to. But then market is not so smart in valuing those companies. They will say 30p ho gaya, 40p ho gaya. Arey bhai, this is going at 50, 60%. So iShares also happened like that. It was making when we looked at the company in
2010 or 11.
No. I think it was 5 years back, 4 years back, 5 years back. When it was about 2,000 crores, the profit was about 100 crores. So 20 or maybe profit was a little more, or market cap was a little less. So at that point of time, we bought it as a truck story. And what happened was we thought that RE is a backup. If truck doesn't happen, this will not allow us to sink. So my call was the worst is that in next 5 years it will double, or it will go to 10 times. If we are successful, it will go to 10 times. And if we fail, the failure will be at least double. That was the call in iShares. I clearly remember. I said downside is 15%, upside is 40-45% component. So it worked out. Okay. So when the RE became popular and they started earning money from that 15-70% EBITDA margin, now they're at 32% EBITDA margin.
25% CAGR growth even on a high base. I looked at the July numbers.
So that time they were growing at 70-80%, and stock was available at 20p. Whenever your earnings growth for next 3-4 years is going to be say 2x of your P, say your P is 20, but you expect the growth to be 40, you are sitting on a multi-bagger.
That's a great point.
So you know that formula we had done up right from 2003, that compounding and how it works and all. These are all gift of wealth creation study. So I have in back of my mind, whenever I get any stock, good quality stock at half the peg, you have to pile on.
Are you seeing that opportunity somewhere?
Opportunity keeps coming. Every 6 months, 8 months, we'll get one. It is not there as a.
As we speak,
there are not 20 ideas. I don't have any idea like that right now. But quite possible when you go out from your office, we might get that idea.
You always hint at what you're looking at. You know, 2 years ago you told me it was United Spirits and HPCL.
Yeah.
Is there a hint you would like to throw at us?
I mean, I think one of the business which I am very close to is AMCs. Okay.
Because
this segment,
the business.
yes, I understand this business, and it's very exponential in character, and a lot of money is coming in, and good AMCs, all the bigger ones are getting listed now. So that will be a great opportunity, and this is the largest business in the world. I mean, today I think the largest is
it would be
BlackRock, which manages about closer to $6 trillion. $6 trillion
That's right.
Single-handedly. So I think the very nature of the business is very consolidated in character, and we have just about begun in India. I mean, the equity flows have started, and it will become much bigger. So I think the opportunity to, because equity mutual fund assets are just about 6 lakh crores, 6 lakh crores out of 135 lakh crores, and your deposit base is 100 lakh crores. So I think it is just a sunrise industry, and in that you get the biggest and the best to invest. I think it's a free cash flow business, rapid free cash flow, rapid growth, terrific brand equity. Can we get it at some reasonable price? So I think that's one area where you might get this opportunity, but we don't know which one comes when and at what price it comes. So that is one opportunity. Then the banking system still looks to be pretty good in the sense that the newer banks have come in. I hope they open the tap license on tap, and when I saw today's paper that incremental deposit accretion of the public sector bank is only 34%, where their installed base is about 78%. I think when the installed base shifts from the current 25, say 22, 23% for private sector to say maybe even 50% in next 10 years, it's a stunning kind of opportunity for any of the well-managed banks, any of the well-managed banks.
A word which you have freely used in perhaps your recent wealth creation studies is value migration.
Yeah.
You give the example of Bharati and Indian pharma companies. Yeah. Now, we've seen value migration happening in private banks because they gained market share from PSU banks. Do you think the next leg of value migration could happen to some of these NBFCs which are now becoming banks? And there are a couple of them. AU Small Bank, there is Ujjivan, there is Equitas.
Yeah, so value migration is a much broader thing. See, what is happening in value migration today? PSU banks, the banking opportunity is moving from PSU banks to private sector banks. That's a broad theme. Now, private sector bank is also in the form of NBFCs. NBFCs are not their extended arm of banks only, because NBFCs get the liability from the banks. Banks stop at the branch and the NBFCs go up to the doorstep of the customer. That's how NBFCs are supposed to be doing. So, clearly this NBFC plus private sector banks are one considered lot which is benefiting from the current slowdown or whatever NPL problems or managerial problem, whatever problems PSU banks have, that is directly benefiting these guys. Now, it is such a longevity opportunity because it is happening not in a static world, it is happening in a 15% growing world. So, the size of the banking opportunity is growing at 15%, and then you are shifting the share from 10-15% to 50-60%. So, even if the share becomes 50-50, at that point of time, the number one private sector bank, I don't want to name anything, but number one bank would be worth 40-50 lakh crores. It will be very large.
So, the size and the scope
look
is
at
enormous.
Look at HDFC Bank. Today it is 6%, I think 6.5%, 7% share. SBI is 22%. So, forget about 22%. Even if you go to 12-13% in next say 5, 7, 10 years, what will be the size of that expanded banking system?
And when the economy itself is growing at about 14-15%. So, really the size is very large. I'm just going to get some closing comments from you. And this is not about today, tomorrow, this year, next year. Let's say by 2020, what kind of market do you think we could be staring at?
Very difficult. Nikunj, don't bother about 20 and all. Manage today. 20 is managed. See, you got to have a good process. You got to be optimist that, I mean, I have seen 30 years of this market.
Is that the differentiating factor for you that we always optimistic?
Yeah,
is that necessary
if you're not
for a good investor?
It is a must. It's the first starting point. If you're not optimistic, I mean, overly optimistic is not required like me, but if you have to be a positive guy, because if you start seeing the bad things in the companies, there are so many bad companies that you'll be stuck with them only. So, stock market is like that, you have to dip your yourself into the water. You have to come put your some investing. And good thing is that when we started our career in 80s, there were no good managers. There was no this mutual fund concept. Today you are a professional. You are earning wonderfully well. You don't have to sweat about which stocks to buy. You find one good manager, give the money, and done.
Like Peter Lynch once said that far more money is lost in anticipating the correction than when the actual correction comes.
Yeah, so what happens is that timing the market is the biggest curse. Yeah. So what happens is that yes, if you can time it successfully, you make some money, you save some. But while you're timing, you lose so much that it is not, I mean, you lose 10 and you gain 2. So for the 2, people are losing 10. Abhi kya karne ka? They have to decide.
So closing comments, I read your presentation which talks about 0 se 1000. Right? Yeah. When do we add another 0 to 10,000? When will you make that kind of
much easier. It's much easier because I mean 0 to 1000 has taken 30 years.
Yeah.
I mean 1000 to 10,000 if it doesn't happen in less than 10 years, I think we have done a bad job.
I wish you good luck and thank you for just discussing a range of topics, including your thought process, your journey, and how from very humble beginnings where you've really inspired a lot of investors and a lot of our viewers. So thank you for your time today and look forward to much more engagements with you.
80 now is my home.
Thank you very much. And that's it on this edition of Market Makers. Thank you for tuning in.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.